What if I told you I knew where the next phase of AI was going? What if I told you we could be early in positioning into the next move before it happens? In this video, we're going to be talking about just that. Stay with me through the whole video because in this video, we're going to be talking about Microsoft earnings, now earnings, and today's massive move of over 28% in Atlassian Corporation. Somebody help me in the comments with that name. Atlassian Corporation, we'll just call them Team, the Team Corporation. They moved 28% after they blew away earnings estimates. And they ended up being up almost 20% in after hours. We're going to be talking about them, what they're doing right, and what Microsoft and ServiceNow are doing wrong, while also I'm going to be talking about 10 names that have not reported yet that are going to be massive, in my opinion, in the next phase of AI. So stick with me for all 10 and let's get into it. So, Microsoft the other day reported pretty meh earnings. If we pull up the earnings here, you can see that they came in reported $3.23 of EPS compared to $3.11 of EPS, right? They reported 69.63 billion in revenue compared to 68.87 billion in revenue. You know, they beat by 3.89% on EPS and they beat by 1% on revenue. And they guided, basically in line. Nothing sexy, nothing crazy for a company that's valued this high. And if you're wondering what all these lines and everything on my chart is, this is my personal trading strategy. We're going to be talking a little bit about fundamentals today, but we're also going to be talking about some of the trading aspects as well through charting and just where I see these stocks going. So you're definitely going to want to stick around to see all 10 of these stocks that I believe are gearing up for pretty massive moves. So Microsoft here, they're down 6% today after again they reported some, let's just call it meh earnings, right? I mean, it's Microsoft. They're going to come in and consistently beat on EPS. And they're going to come in and consistently beat on revenue. But at the end of the day, it's pretty meh earnings. And as a trading standpoint, we're just kind of in this little consolidation period. And I'm not really trading this name. We're in this consolidation period. And until we make a move up or down, I'm not really looking to trade this name at all. I think they're pretty fairly valued or overvalued at this time. And there's just not a lot that I'm seeing right now. But we just had a big, again, big downward move in ServiceNow, which ServiceNow, everybody knows what Microsoft does, so I didn't really explain that. But ServiceNow provides a cloud-based platform for digital workflow automation and IT service management. They're a very large company, as you see, $208 billion of a market cap. They came in with earnings yesterday, and they also came in line with a very, very small $6 million miss on revenue, while they came basically in line on EPS, and they actually guided a little lower than expected. And with this company, the biggest thing about it is that they've run up so much with all the partnerships with Nvidia, with all of the high flying talk around this name. And the thing about it is they've just gotten to a valuation. They got to a peak of 1,000, almost $200. They got to this massive peak, and to be totally honest, I ran them through my investing model, and they were very overvalued up here, and I believe they still are pretty overvalued at this point. And you see that on this green and red line here, that's the high five indicator. That's my personal coded trading strategy that I use to help me win consistently in the markets. And you see, we've now flipped to red on that name, and we were pointed straight down to have a cross through the yellow line, which is the smoothing line. And if we have that cross, then we are most likely going to continue down we're going to continue downward, probably about right to here, about the $1,000 and $950 level, because that's where we had previous consolidation point. So, and we also have this indicator up here, which is the Williams percentage range. And essentially, I have this Williams consolidation box strategy. And essentially, what it is whenever we come up here and we make this box with support and resistance, and we stay within this box, going sideways like a crazy person, we're going to continue higher in the stock But whenever we break said box and or flip red on the high five indicator here, we're in for a downward move. Pretty simple to follow, right? So the last thing I wanted to touch on is that this 50 line, you basically have below the 50 line on the Williams percentage range is typically bearish, and above the 50 line is typically bullish. So just another thing I wanted to put in there as a little caveat. This is a red barrier. This is the green support barrier. Essentially, when you come up to this red barrier, you bounce off of it. It's resistance, and when you come down to this green barrier, you bounce off of it, and it's support to bounce you higher. So reject you and bounce you off to send you higher. So just wanted to lay out the land for you a little bit to go out through this video. So yeah, just real quick on now, I believe they just were a high flyer, crazy high valuation, and they came in line with earnings, which doesn't line up with their valuation. So what do we see? We saw this massive, basically, ended the day at 11.44% down. They were about down the same thing yesterday after hours when they reported. So nothing crazy there, right? But here's where we're going to turn that chapter. And here's where I'm really seeing things change. So in the markets, we're really seeing this change of hardware is kind of running its course. I still believe they're going to do very phenomenal in the future and for the years to come, but at this time it's not sexy anymore. It's not the new thing anymore. It's kind of stale, right? It's kind of stale. And as such, the market is looking for something new. We already know about GPUs. We already know about the hardware. We already know about what they're doing and how many Blackwell chips will be needed. The market already knows all of those things. And I'm not saying those stocks are going to crash. I still think they're going to do very well, like I said. But we're looking for Nvidia in the beginning of 2023. We're looking for ServiceNow at the beginning of 2024 beginning of 2024. We're looking for AMAT the beginning of 2023, 2024. We're looking for all these different companies, these hardware companies. We're looking for those companies before they make that parabolic move. We want to position in those names before the big run up, before this massive move higher. That's when we want to be in them. We want to be in them right there whenever we get that bullish cross of the high five indicator over the smoothing line. That's when we want to be in them. And we want to ride them all the way up here to massive amounts of gains and say, you know what? The trade is done. We've ran our course. It's time to get into the next phase of AI. It's time to get into the next trade. It's time to position ourselves in the next trade before it goes parabolic, or the next investment before it goes parabolic. That is what we were doing as traders. That is what we were doing as investors. So as such, with this name, these two names were high flyers, but they've kind of run their course a little bit and they need to take a little breather. But these names are so much different in the technology services uh, era than these other names we're going to talk about today. These names have been high flying this whole last year, in 2024. They've been high flying. They've run their course. They have all the rosiest of assumptions priced in. But the companies I'm going to show you, the 10 companies I'm going to show you today, do not, in my opinion. They don't have it. They're not at all-time highs. The majority of them are not all-time highs, and the majority of them are fundamentally at great prices, in my opinion, for this next secular boom and next chapter in AI. So, brings me to Team, right? So, we already talked about Microsoft, and now those were very overvalued or at fair value companies that came in line with earnings, and they had a big miss. Now, this company, we'll call it Team because I can't pronounce that. Team, they are not overvalued. They are not at all-time high. Sorry, let me get to the weekly chart. That's my bad. They're not at all-time highs. Their all-time highs were back here when? In 2021, during the last Super Bowl cycle with the Trump administration. This was the last time they were at super high levels and all-time highs. They are still way, way below that all-time high. And their valuation is is in my opinion, along with all these other companies, is very cheap for what they do. Now, if you don't know what this company does, Team, because I don't know what that is, at Lazian, they offer collaboration tools like Jira, Confluence, and Trello for project management and team collaboration. Obviously, why they're called Team. So, I've never personally used any of these products that they have, but I've done a lot of due diligence into them, and I've done a lot of research into the company and the financial statements, and they are just consistently hitting on all cylinders, and they're growing at a rapid pace, and hence why you get a massive 29% EPS beat and a good solid 4% revenue beat. And as you can see, as this company, you can't see it here, but on the 4-hour chart, that's why you get a 20 some percent move. Now, you saw they had a nice beat on them and they didn't just come in line, right? And they're not at all-time highs, and they're way below those all-time highs that they were previously at. And like I'm telling you, they're not at these extremely high valuation prices such as Now and Microsoft are, which sets up this big 20% plus move that we've seen. And just in AI in general, the next chapter that I've been talking about that I haven't explained yet is this. These are all these are all technology services companies. They all offer essentially a SaaS business model. And essentially, with that SaaS business model, they're just getting consistent subscribers, consistent revenue on a monthly or yearly basis. And with those models, they're very lean and mean, I like to call them. Very lean and mean because essentially they have very high margins on the money that they're pulling in from those subscriptions. And if you wonder what SaaS is, it's subscription as a service. So sorry I didn't explain that acronyms. And they consistently bring in that subscription revenue. So it's consistent, it's predictable. And the biggest thing about this technology services space, because all these companies have this in their SaaS business models, the biggest thing I want you to understand is these are the next phase of AI. Simply put, because with where things are right now, with all the hardware they're running through Nvidia and AMD, with all the hardware they've gathered and they started running, they're basically building AI bots and they're building these tools to help simplify their products for their customers, but not only for their customers, but also for them. You see, with these giant businesses, the best thing that they can do is simplify and create cost cutting measures all over their business. When you do both of those things, you can get rid of employees that you don't need anymore through AI bots. You can create even better products for your customers. And overall, what that does is a twofold effect. Essentially, you will get more subscribers, you will have happier customers, while also your already phenomenal margins and your free cash flow will only get better because you have less employees, you have less operating costs that you need to fork out because now you have all these AI bots running things more seamlessly and you don't have to pay them, feed them, give them lunch breaks, XYZ. You see what I'm saying here? You make your business leaner and meaner than it already is, and these companies pull 80% plus 70% plus margins. They pull massive free cash flow. And you're telling me it's only going to get better with AI bots and with just making the business run so lean and mean with as least employees as possible? I know it sucks people are going to lose their job, but it's okay. There's going to be expansions everywhere else. Trust me, there's going to be expansions everywhere else and there will be more jobs. AI is not going to take everybody's jobs and put everybody out of work, okay? But for these companies, and this is why I'm really pinpointing these companies right now. I'm so bullish on the technology services and SaaS companies sector right now because I truly believe this is that next stage of AI. We got all the hardware. We're running as lean and mean as we can. I know Blackwell's going to come out and there's more great things coming down the pipe, but right now we haven't figured out how to make this technology that we have, this hardware, we haven't figured out how to monetize it through creation of services, through creation of AI bots, which these companies I'm talking about are figuring it out right now. So that is why Team is exploding over Now and Microsoft because Now and Microsoft have already run so hot. So you have this next AI phase, which Now and Microsoft are definitely going to get benefited from it. But to this point, everybody's been talking about Now and Microsoft and how they're going to benefit so much from this new phase in the future. And it's already been priced into those companies. I don't think it's been priced into these companies at all, or you would see them all more so towards all-time highs. So this is what I'm saying to you all. And this is my thesis and my bull thesis in this next phase of AI. So without further ado, I've laid out the land. Let's get into some of these names and let's talk a little bit about their charts and how they look. So team, this one's already exploded. We're not going to talk about that one. It's great. There's still a lot of room to run, but I don't want to really talk about it because I want to be in the names that haven't had those explosive moves yet. So, first up on the chart is CRM, Salesforce. Salesforce, they deliver customer relationship management. CRM, customer relationship management. Software and applications focused on sales, customer service, marketing, automation, and more. Automation. They have this cool little AI bot called Einstein. Yes, Einstein, Albert Einstein. And he is used for companies to help them make all of the products that CRM offers and all of the sales tools and management tools and marketing automation and customer service tools to make it all seamless and to all be ran through Einstein, this AI bot that they have. Massive. CRM, I'm telling you now, CRM, Salesforce is going to be the leader, if they are not already the leader, in AI bots. The leader. And as such, they are right below their all time highs now. And they're about to explode higher, in my opinion. $328 billion market cap. I know that's expensive, but their their valuation and how they've run this last year was pretty nice, but they had this big correction, big dip, and they moved back up here to all-time highs, but it is nothing compared to how Microsoft and Now have been moving, and they are a direct player in one of the biggest sectors that I'm talking about, that with the AI bots. One of the biggest ones, if not the biggest one. So they have earnings March 4th, so we have a little bit of time on our hands. They're expecting EPS of $2.61, and they're expecting revenues of $10.04 billion. And essentially, I know we're red right here on the high five indicator, but the thing I want you to look at is that we had this pullback and we pulled right back up here. Now we're kind of sitting here making this little bit of consolidation, as you can see here. And as such, we're consolidating above the high five indicator and we're really curling up. And when I look under the hood here and my other indicators that make up my high five indicator along with other things, we really start seeing this curling happen. And when we get this flip to green, you see what we have. We have these massive moves up. Massive moves up. And so we have these massive moves up, and then this was a crash, obviously, in the markets. Well, typically we have these massive moves up, consolidation, massive move up, consolidation, massive move up, consolidation. Then once we hit the green again, we'll see another massive move up, in my opinion. And a little charting, we have this beautiful cup and handle. If you don't know what that is, it's okay. Just a charting pattern, just a way you can kind of try to predict where stocks are going, but essentially the measured move of this cup and handle is all the way up to about 500 north of $500 essentially. And we're currently sitting at $343.57. So as such, once we take out this high of $368 here and we flip the green on the high five indicator, I do believe we'll have a very nice move to the upside in our hands to 400 and then 500 plus. And that'll also bring our Williams percentage range up back into a Williams consolidation box, as I've said before. And when we have these like this, as I've said, we get the moves higher during this time, right? So when we get those boxes, we get the moves higher during those times. So I think we'll move back up here, create that box, and continue sideways as we run up to 4 or 500. That is only one name of 10 total names, everybody. I know this is a long video. I appreciate you sticking around with me if you're still here. Please, these videos take a lot of effort and a lot of time, and I would really appreciate it if you feel I earned it, if you would smash the like button and give me a and subscribe here or follow or whatever you're viewing this on, whatever social media you're viewing this on, or yeah, I would really appreciate a follow, subscription, whatever. As I'm a smaller account, and I'm doing my best to put out the best content for everybody as best as I can. So enough of that. I appreciate your time. Let's get into the next one here. So the next one we got is Datadog. Datadog, they specialize in monitoring and monitoring and analytics for cloud scale applications, providing observe observability across systems, applications, and services. Sorry, sometimes I write these things down and I can't read. So they're another technology services and a SaaS company. And obviously they're very big in cloud and data. No duh, it's in the name. And obviously with data, there's going to be massive amounts of data as technology grows in the future. That's an obvious thing. Whenever if you have an iPhone or you have any phone, you understand that whenever you have too many pictures or messages or X, Y, or Z, you get too much data on your phone or in the cloud. And then you have to pay $1 or $2 or $3 a month to get extra 50, 100, 200 gigabytes to be able to back up all that data. And as data continues to grow in our world through advanced technologies and obviously AI, we are going to need companies like Datadog and another company we'll get into later in this video to help basically store all of that data. Data, I keep on saying it, data is king. Data will only grow and data will continue to get more advanced, and you will continue to need bigger and bigger warehouses to house said data. So, as such, Datadog is going to be a massive name. It's a $48.45 billion market cap, and they're reporting earnings Thursday, February 13th during the morning pre-market. They're expected to do 43 cents per share, and they're expected to come in with revenue about 715, almost 714.5 million dollars. So with this company, similar to Salesforce, you see that we have this consolidation period, and we are still kind of turning this ship. So we had the consolidation on the high five, and now we're kind of turning this ship, and I believe we'll flip back to green here on the weekly chart as well. And you see we have this consolidation and then this move higher, consolidation, and I believe we'll get this move higher. And another reason for that, you guessed it, we have another beautiful cup and handle pattern right here. And we're coming back right to that cup and handle retest area. So essentially with a charting pattern, you get a breakout, you come back to said breakout point, which is right here, you retest, and you basically are confirming that charting pattern. And then from there, you can go ahead and move higher. And the measured move of this charting pattern, as we can pull up and see here, is going to be a massive, let's see, 121%. So we dragged that over here to the breakout point, and that puts us at all-time highs of $214. Last all-time high was when? Yep, you guessed it, early 2021. So another name of many names that we'll get into that is below its all-time high point. but the business continues to beat, as you see by all these earnings that are green, meaning that they consistently beat on earnings and the business is consistently getting better. So again, and we are also turning here on the Williams percentage range, and I believe we'll come up here, form another Williams consolidation box, and continue higher. So just another name to add to the list that I believe we're early on for a big move. You see that's a 55% move. You see the last one, Salesforce, from current levels up to 500 and some. That's a 40 some percent move as well. These are massive moves ahead. Just a reminder that the average the S&P 500, if you just do the markets, the VOO or something, the S&P 500, the average return per year is about 8 to 10% per year. And I'm telling you, you can get 50%, 40 some percent in just these couple stocks. Now we still have more to go. So we have up next, we have Net, which is Cloudflare. Cloudflare. They offer a content delivery network, a CDN, content delivery network, internet security services, and DNS services to improve website performance and scrutiny. A very much needed company, obviously, as technology continues to grow and grow and grow. This company will only become more and more needed as technology continues to advance, as we all know, because the internet's only going to get bigger. These delivery networks are only going to get bigger, and the security of those websites and delivery networks need to stay secure from cyber attacks and just at least a baseline of security. Obviously, we'll get into a company here later that actually directly is a cybersecurity company, and a lot of you probably already know what it is. So that's Net. That's Cloudflare, also a $47 billion company, also well below its all-time highs back in 2021, but yet consistently have been beating on earnings. Wow, look at that. Are we seeing a trend here? I think we're seeing a trend here, right? I think we are. Cool. Let's go. So, cup and handle pattern again, breakout right here. This past week, we had a nice, beautiful breakout because people are catching on. People are catching on. Smart money's catching on to these names. They understand this is the next phase, but we are still early. But we won't be early for long because you saw what happened with Team, and you saw, and luckily with Microsoft and Now, these names got a big pullback this week after starting to run. They launched out the gate, and then they got reeled back in because of Net and Now, or sorry, because of Microsoft and Now's meh earnings. But now, and those are dip buying opportunities. I was buying up the dips left and right on all these names. But now Team just spilled the beans. They just spilled the beans. They spilt that tea, and everybody now knows that guess what? This is the next phase. This is happening. And when they reported earnings, all these other names through sympathy play were up over 1% after hours. So trust me, we're still early, but we don't got much time. Things are the timer's ticking down. There's not that much sand left in the top of the freaking whatever it's called. So there's not that much time left. But again, yes, another cup and handle pattern. If we measure this move, we have a massive measured move up to $233. So essentially, right, yep, you guessed it, at all-time highs. And that is a move from even the price right now of 63% on this name. Another 63% gainer on this name. Massive, massive. Let's get cruising. Let's get cruising so we can get through these. Next up, Okta. Okta. Okta provides identity and access management solutions, enabling secure access to applications and services for employees and customers. Another big technology services, packaged software, SaaS company, subscription as a service. And with this name, you guessed it, 2021 all-time highs were way off of those. But guess what? Okta just landed a massive deal with who? Formula One, McLaren. Okta enters multi-year partnership with McLaren Racing Formula One team. Shares rise. They rose, but then they fell back down after the Now and Microsoft met earnings. So we got another buying opportunity. But again, look at this company consistently beating earnings over and over and over again above the 50 line. We're actually actively creating our Williams consolidation box. All we have to do is create a little bit of support in here, and as such, we'll continue sideways and move onward and upward in this stock. This is one of my favorite names of the bunch because we have such a large area to cover to get back to all time highs. We're talking about over 200% higher to get back to these all time highs. Now, it doesn't just work like that. These were all time highs. We're down here. It's going to go there. That's not how it works. That's not how fundamentals work. And that's not how business works or the stock market. But I will say this, all of these names are obviously, they have a pattern. They have a pattern. This name obviously reports on, they report February 26th, 74 cents EPS, and then $669 million revenue. So I, from what I'm seeing, they're most likely gonna beat those numbers in my opinion. And yeah, all these names, I'm telling you, like it's really gearing up. It's really gearing up. And that McLaren win is so massive because McLaren has McLaren has so many billionaires and CEOs that love Formula 1 racing. So as such, I believe they're going to get a lot of backdoor deals with these companies because they're going to have these meetups at the races and, backdoor deals and so on and so forth, guys. I mean, Formula One's just a massive sport, and to be part of that as a company, as a $16 billion company, I believe it's just gonna pay them dividends over time for scoring that deal. But guess what? Another cup and handle. Cup and handles are, and the reason you're seeing so many cup and handle patterns is because they form at the bottoming out of a company. When you get these companies bottoming out, that is when you get these cup and handle patterns. So with this cup and handle pattern, we're not broken out yet up here. So we have plenty of room to go. But we also have this little bit of a bull flag as we see here. We have this bull flag and we are breaking out of that. We could also say that we have this falling wedge pattern and we already did break out of that. So we have some nice charting patterns. But most important, because of my strategy, we're above the 50 line, which is bullish. We're creating a Williams consolidation box, and our high five indicator has already done what? It's ran through the smoothing line. So it made this bullish cross, and we are currently green on the high five indicator, meaning that we should be good to go and continue higher as we've seen in the past when we flip to green, right? Sometimes it's short lived and then we snap back. Sometimes it's a little longer lived. And then as we see back here, sometimes, we get a good run out of it before we flip to red, consolidate, and then move higher again. So this name is also looking very well. The McLaren deal is obviously huge. And then just the overall company with the identity management and access management and serve applicants and services for employees and customers. It's just another SaaS name that's, just been consistently killing it. But the stock hasn't caught up to the company, or the price hasn't caught up to the stock. And yeah, just big moves ahead, in my opinion, in this space. And like I was already telling you, right? So Salesforce is selling AI bots and they have AI bots. These other companies, they're going to get AI bots. They're all going to get AI bots. And when they get those AI bots, they're going to become leaner, they're going to become meaner, margins are going to absolutely fly higher. Even though they're already 70-80%, they're going to go to 90% or something crazy. And they're going to be putting so much money in their pockets with free cash flow and the bottom line. It's going to be wild because they're going to make their companies lean and mean, and then they're going to help other companies, or they're going to build or they're going to build other products, or they're going to really refine their products to where they're so needed by other companies. Massive days ahead, massive days ahead. Snowflake, another name, massively off. It's 2021, 2020, end of 2021, beginning of 2021 highs, massively under where it once was. and kind of deserving so. When they're here, and even right now, their valuation is kind of crazy. This is the one that's probably still the most crazy valuation on this list. Just a very high valuation. But here's the thing. Datadog is number 2 in the data play. Snowflake is number 1 in the data warehouse play. They deliver a cloud-based data warehousing solution for storing and analyzing large data sets. So they store the data for companies and they analyze it and spit it back out and say, this is what you need to be doing with your company. This is what you need to, this data tells you need to go here or there or do this or that with your company and your business. Massive. Data is king. I don't think I need to keep saying that, but data is king, guys. And Snowflake, they finally had a big move after big earnings, and I think they're only getting started. We had the flip with a high five indicator. We had the bullish cross. We are currently green. We had a nice little dip that we got to buy into. We're consistently making higher lows in the Williams percentage range, and now we have formed our Williams consolidation box. I believe we're going higher and higher and higher in this name because they're finally hitting their stride. They're finally hitting their stride. They're a $59 billion company, and I believe they can really balloon into a multi-hundred billion dollar company. We're talking about data. We're talking about massive amounts of companies. Microsoft, now, all these companies have data. That all needs to be stored. Apple, Google, Amazon, Tesla, all of these companies, they have massive amounts of data. Think about Tesla. Tesla has massive amounts of data that constantly needs to be stored through all their full self-driving data that they receive back from the cars. They need to store that somewhere. They're going to hire Snowflake. They're going to say, "Hey, we need you to take over our data and analyze it and make it the best it can because we can't do it anymore. We need to focus on the other things we're doing like Optimus and energy." Right? So this one as well doesn't have a cup and handle. Actually, it's not a cup and handle. Actually, yep, it's a smaller cup and handle. Boop, boop. So we have a cup and handle down here. This measured move goes up to about, let's see, up to about $271 per share. And then I believe by that time, we'll actually have this other massive cup and handle. If we go from here and then we come down here and we'll have something like that. And then we'll have another breakout to the upside. So again, just a name that, is a bit high on the valuation, but I believe the growth is really about to start picking up massively for this name. They've done good at consistently beating, except for a couple here and there, but they consistently beat. They're on the up and up. And yeah, my high five trading strategy, the high five indicator, and the Williams consolidation box, they're looking really good. Whoop, just spoiled it. GitLab. GitLab is up next. Another one. Yep, you guessed it. Below that, I'm just not going to say that anymore because I keep saying it. We're below, these all-time highs. Yet while the earnings keep getting better and better and better and continue to climb higher, we have this beautiful cup and handle. The measured move is up to, let's grab it. Measured move is up to $130, so almost all-time highs. Got a massive move in ahead of us, and what this company does is a web-based DevOps platform offering Git repository management, CI and CD, and DevOps tools. So essentially, this company is very big in coding and helping with code, storing code, and protecting code. Just listen to the words that are coming out of my mouth, everybody. These companies are so well positioned for more and more and more technology. They're so well positioned for more technology, more advancements in technology, and overall continued growth in these areas. I mean, in all different fields, they're all SaaS companies. They're all technology services companies, packaged software companies. But do you not understand listening to me talk about them? They're all different. They're all doing different. They're all in different areas. They're not competing with each other. They're all in different areas, which makes it even more sweet. Makes it even more sweet. It's like getting I don't even know. I don't even know. It's just even better because you have all these companies in different fields that aren't trampling over each other and that all can move massively together in the SaaS space, but separately with separate moats. And that is massive for all of these companies. For Team, for CRM, for Salesforce, for Datadog, for Net, for Okta, for Snow, for GitLab. The only companies that are really similar right now would probably be um, Datadog and Snow. You know, they both are competing in that data area. But again, like data is king, and there's so much need and room for. So yeah, just another one that's primed and ready to go. Next up, we got MongoDB. MongoDB offers a NoSQL database designed for modern applications requiring scalability and flexibility. So another SaaS company off its highs. Um, this one doesn't look as bullish right now. Again, this one's down in the dumps, just a little bit off its lows, multi-year lows here. But at the same time, you know, we're starting to see this, basically this higher consolidation area. So we had our lows, and now we have a consolidation period above those lows, and then we should, if this company continues to produce, have another move up and another move up to this area and continuation higher. MongoDB, not gonna lie, don't know the most about this company. This is probably the company I know least about, so we won't spend a lot of time on it. We aren't on a green high five. We are on the bottom. We're under 50. Nothing. This doesn't look like a good trade or investment right now based on what I know about it. So we're just gonna go ahead and move on. But make no mistake, it's in that SaaS technology services package software realm. So you definitely do need to add it to your watch list. CrowdStrike. Told you we had a cybersecurity name in here. This one's also at all-time highs right now, but I believe they're um, the king of cybersecurity right now. CrowdStrike is the king of cybersecurity right now. Palo Alto is they're floundering a bit right now, and CrowdStrike is really just, hitting their stride and doing very, very well to continue to take on market share in the cybersecurity space. Now there's going to be plenty of winners in the cybersecurity space, but I believe CrowdStrike is probably going to be one of the biggest ones because of what they do. So they provide the endpoint security and threat intelligence solutions to protect against cyber threats. So very, very key, and highly needed for any of these, like for any company, honestly, especially for the larger companies. They are essentially stopping cybersecurity threats in their tracks, before they become an issue. They basically are not allowing them in, or they're setting a trap for them, letting them in, and then just axing it right there and actually figuring out where that came from. So really great company here. Almost $100 billion market cap. I believe they could be a 500+ billion market cap one day. I believe the future is bright for this company, and yeah, they're clicking on all cylinders. As you can see, they had this massive sell off here, and that was because of the whole. They pushed an update. I'm sure you remember that they pushed an update that was not ready to be pushed, and it basically crashed a bunch of people's computers. And then this whole thing was just it was messed up. But what a great buying opportunity! You got to take those things and just say, you know what? Is this a long term thing? Is this really going to affect things for the long term, or is it going to be like something that's, yeah, that sucks and they really effed up, but um, they'll get back on the up and up and they'll be okay. That's what I said, and I bought in down here. So great buying opportunity. This name, no real patterns here, but all I can say is that we're green on the high five indicator. We're on an uptrend. We're looking really good. We're here at all-time highs, about to break over that. Our Williams consolidation box is reformed after we had this dip down here, and everything's looking good again on this name. They report earnings on March 11th. expected 86 cents of EPS and a little over $1 billion in revenue. All right. How many more we got left? We have two more. We have Shopify, and then we have one more name. And I will say you're gonna want to stay here for this last name because it is the smallest market cap of the most and might have the largest upside in it. And it could be an acquisition target. So Shopify, I'm sure a lot of you know Shopify. They essentially enable businesses to create their own online stores and sell products through various sales channels. So Nike is a user of Shopify, pays a monthly subscription to use their products and to sell on their sites. I personally have some friends who sell children's clothes that they make on Shopify. So many different businesses, from small to mid to large businesses like Nike. So many businesses. They're also going to be in that space of the AI bots coming in, cutting down on workers, cutting down on costs, making the tools, making the products as best as they possibly can, and then regurgitating that back out to customers while also making their business more lean, more mean, more so than the 70 to 80% margins that they're already having right now. And that is just going to massively give them better EPS, better free cash flow, and just overall a better stock price. This one's also a cup and handle. You find it on the bottom, bottoming out patterns, right? We're off our all time highs back here in 2021 of about 176 ish. And this measured move is up to about 80% higher, up to $218 with our Williams consolidation box formed. And our high five indicator is green. So we're looking all systems go and very, very good on Shopify. I really like this company. And last but not least, our number 10 company is UiPath. UiPath specializes in robotic process automation, RPA, software to automate repetitive tasks and improve efficiency. This company is only an $8 billion company. And I believe if they don't get things turned around, I think they will. But if they don't, I believe this is a key acquisition target for somebody like a Salesforce who has their own AI bots, or another company that's looking to break into the AI bot space. Now, the only pattern that I see on this name that actually looks pretty good is what we call a double bottom. A double bottom is essentially where you come down, touch the bottom once, you make a neck a break line essentially. You come down, touch that same bottom or right near it again, you bounce there, and if you break over this neckline essentially, you have a double bottom and you have a measured move of this right here. And you take that and you drag it up here, and we're probably looking at about $45 from $15 down here. Now, you don't typically make the move until you break over this high of $28, but you can see that we actually are starting to get this roll on the high five indicator, and we are actually starting to make our way up to above 50 because this space again is getting hot, and we are still a little bit early, but people are catching on very, very quickly. So we have this flip and bullish cross, green through the smoothing line, and we're starting to go higher, and we are green on the high five indicator. So this name is obviously also, like I said, one of the biggest moves because its all-time high back in 2021 was $90. Well, we're at 1458. So yes, it is the smallest market cap of 8 billion, and it has the largest move it could possibly get back to. Now, I'm not going to lie. It'd be very hard for this company to get back to the heydays of, $90 plus per share, and that's a 500% move. They definitely could. Their products are very solid, and yeah, their products are very solid, but they're in this space where things are really difficult right now, and it's just going to take some time for them to really, get back on track. They're consistently coming in and beating earnings again. They're starting to get profitable, and we could see things flip over here shortly. It is worth some more due diligence and more deep diving into the company to figure out if you would like to trade it or invest in it. But hey, that's my take. I hope you guys enjoyed the video. please consider following, liking, subscribing, all that great jazz. This was a monster video, almost 50 minutes, but this definitely deserved 50 minutes because this is the next phase of AI. I'm telling you, this is the next phase of AI. And you can save this video, you can bookmark this video, you do whatever you got to do. But I want you to look back in months or years from now, you come back to this video and you tell me if I was right or wrong. I'll say if I was right or wrong too, obviously. I'm humble and I will always admit when I'm right, always admit when I'm wrong. But on this one, I am very, very confident that this next phase of AI is starting right in front of our eyes. And it's about the AI bots. It's about making these businesses lean and mean more so than they already are with the SaaS business model. And overall, the next phase of creating amazing tools to be harnessed by these companies and given out in their SaaS models. I appreciate you all. I love you all. I'll catch you in the next video. Have a great day.